Hello traders, today's the 25th of February. My name is Neville Hornsey, market analyst trading, and today I'll be taking a look at gold. Okay, before we actually get into the gold chart, look into the bottom left-hand corner, we've got a green. If you look to the top right corner, it's red. So for me today, it's risk on. The commodity pairs are doing better than the safe havens. If you look to the yen, it's pretty weak across the board, only stronger against the euro and the US dollar and the Swiss franc. Swiss franc is the weakest, and along with the euro. And then if we look to the Australian dollar, that seems to be the strongest along with the Kiwi. Looking at some news, we had some good news today. Well, potentially gas flows via the Yamal Europe pipeline could resume westward. Since late 2021, we had Belarus threatening to cut off supplies into Europe. Obviously, this pipeline goes through Belarus, it goes through Poland and Germany. We've got a big rise up into December based on the Belarusian threats. Yesterday, we had another big push up because of Russia invading Ukraine. So generally, energy prices are going to go higher. But as we're seeing in the charts today, there may be, if we do get some good news stories where the gas does start flowing westward, if the sanctions on Russia don't impede financial transactions and things like that, maybe the moves into the safe havens will be unwound a little bit, if not totally. So yesterday, if we look to the left, we had gold. We've got 60% of traders on this platform trying to go long. Hopefully my video yesterday stopped people from going long up here around 1965. Obviously, it would be great for the gold bugs to get back up to 2000, get that psychological sort of win. But yesterday's candle obviously shows that they swept the highs of these swing highs here all the way back to 14th of September 2020. And now we're coming back down to try and find where support is and then see if we can pick up any more buyers and to get back up to 2000, or whether we're going to come back down and test what I think is the logical sort of target of around 1680. This range has obviously been going on for a couple of years now. Now we've tested up to the sort of upper limit. I think we come down and test the lower limit, but I'm not going to sort of go short here. I want to see some evidence. So what do I want to see? I want to see yesterday's swing low get taken. So the low from yesterday, if today ends up around the 1900 and we don't take out the low from yesterday, sometime next week or in the future, I want to see that low get taken. Once that happens, then I'd like to sort of see, obviously a dip below into this balance area here, come back up, test the low from the 23rd of February, so the previous day's low here. That obviously was support, saw a big push up before we saw the really big push yesterday. So that particular low from the 23rd of February 2022, I want to see that act as resistance. If that doesn't act as resistance, I want to see the 1900 level and the sort of ranges within these bodies, these candles here, act as resistance. And then I'd like to sort of see a move down into maybe 1840s. If we get through the 1840, there isn't really another sort of level I want to sort of test here. If we go lower, I want to start taking out the liquidity pools below, like pretty much equal lows here at around 1780 and then down to 1752, 1750. Beyond that, like I said, for those that are short and you can hold on, if you do get into a trending move, 1680 to 1676 looks like a good target. However, if we don't see any of that happen, if this balance area here or this old resistance acts as support and we get a push up, then the logical target obviously is the 2000. That would be on the back of more bad news, more sort of safe haven flows. So you'd want to see moves into the yen, sort of back in a gold bull move. You want to see Europe under threat, probably from Russia, something as extensive as that. But for me, technically, it looks like they did what they wanted to do. They got the liquidity up here, all those buy stops, they sort of sold into them. And we saw what happened yesterday. The bears were in control and they look like they'd like to come lower. At the moment, though, they haven't proven that they want to come lower. 1900 may be a bit sticky for a while. So I'm just going to sort of wait my time. If we go down to a 30-minute chart, there are other sort of options that could happen. So yesterday we've got this sort of sweep of the previous day's low. So that's there. Now, if we sort of see a break above these swing highs here, like around 1920, then we could get a push up into this imbalance area here. So we've got this big red candle here, big imbalance, not a lot of volume, just a lot of selling. Put a block there, make that red. Could get a push up into there. And then finally, if you want to really get a tight stop and you're looking for a short, then sort of last sort of chance saloon really for the bears is 1968 with a stop above here, because if you get above there, then I reckon the bulls are back in control and we're going for 2000. So yeah, depending on what happens now, if we look to the left, these guys here tested this balance area here, and we saw selling pressure. So if we do take out yesterday's low, then I'm waiting for that sort of base case hypothesis to resume, and we get a push down, retest, and continuation to the downside. Okay, that's the gold chart that I'm seeing at the moment. Yeah, fingers crossed you guys didn't get caught up in the bull move up here, and you waited for prices to come back down, and now we can just sort of sit and wait, see which direction they take. All right, good luck, have a great weekend, and I'll speak to you again next week.